Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a whipsaw price action towards the late of last week, the market has tumbled for the Australian dollar as traders step back ahead of the packed week that brings the delayed September jobs report, the non-farm payrolls and the Fed's October FOMC minutes. The main attention, however, looks to Friday's AM in Sydney time, September non-farm payrolls, the first meaningful read on the US labour conditions in weeks, while Thursday's Fed minutes, though slightly outdated, may offer clues as global markets navigate the recent data void. Still, looking at the technicals, we have broken down once again for the Australian dollar, and I do anticipate good demand like recently seen around the 64.30-50 area, and if so, should see a correction that looks back towards the region of 65.5 to 66 cents. So still continuing this broad sideways pattern. Turning to the euro, the market was a little bit weaker. Profit taking may have come back into play, and the dollar sits around 99.5. Looking at the technicals though, we are a little bit broken down, so we may see a little bit more, that is, softer play into the week, but support should come in around 115.35 to 115.5. If so, the bounce should finally see a rise back towards 116.65 and then still finding a cap around 117.35 to 117.5. Turning to dollar yen, it still remains pinned near this 9-month high and locked in a rising wedge formation. Keeping an eye of this pattern, it usually turns into a classic warning sign that the upside momentum should fade and demand is likely to loosen conviction, increasing the risk for a downside break and maybe even setting a bull trap. And if so, looking towards this support area, seen around 154.75 and then lower down towards 153.80-90 with the base holding around 182.90. Turning to sterling, the market is a little bit mixed here. Nevertheless, the RSI isn't giving too much away and therefore could still find that 132.0515 as a cap and demand seen around 130.80. Nevertheless, I still feel from this pattern the market should increase to the upside and a break of 132.15 should ignite the move to 133. Weaker play when it comes to gold as it's still in a bit of a downward pressure and reaching its target around 4,036 to 46 now may find a little bit more to this downside to around 4,000 and reassess. Let's see if the market does correct and if so could look back towards 4,200 as a broader call. Wrapping up with oil, still holding the bullish call and that is up towards 60 to around 62.5 a barrel. And therefore could see this overall range eventually break out to the bull case. Let's see, as the support holds around 58.40 and was recognised late last week. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest report and I hope you enjoy the great start to the day.